Welcome back to Uncontested Investing. I'm Tim Harris. Thank you so much for swinging back by. Today, I'm joined. This is week 4 of the Boardroom Mastermind 8-week series. Today, my guest is Brady McDonald. Brady, thank you for being here.
Thanks for having me, Tim.
So why don't you just take a minute and tell the audience a little bit about yourself?
Sure, absolutely. So Brady McDonald from Barrie, Ontario, near Toronto, Canada. So I'm Canadian, and
I'm sorry.
Yeah,
No, I'm just...
we escaped for freedom.
That's the last Canada joke in this segment.
All right, eh?
Hey.
Yeah, we'll get the poutine out later. But
Oh, cool.
so I was an arborist by trade before I started real estate. Started real estate in 2015. Started with smaller properties, duplexes, triplexes, and ended up created a construction company. So we did all the renovations in-house, property management in-house. So we did a lot of burrs and flips up to 10-unit buildings in Canada. And then we ended up doing a lot of land development. So we would buy houses on large lots, knock the houses down, sever them into multiple lots, and then build triplexes, as many triplexes on each individual lot as we could. Then we would either sell them or refinance them. So that's what we ended up doing. And we came down to the U.S. December of 2021. And it's been essentially a year and a half ago, just over a year and a half ago, and to come down and figure out, where the opportunity was here to scale. And that's, we came down for lifestyle and to scale business. And here we are.
And what are you scaling?
So we got it. When we came down, the first thing that we did was just bought a bunch of residential properties in Florida, just to get in so deep that we couldn't just go back home, right? And then from there, we built a self-storage development team. So hired a coach, and so we got 2 self-storage developments in Texas and in Houston. And then we also entitle land for storage and car wash and different types of commercial real estate. So we'll sell these types of properties as well.
Very cool.
Yeah.
So the first segment every week is called the bottom line up front. So the bottom line up front is just I want you to take 2 minutes and just tell the audience maybe things that you're seeing in the marketplace, things that they should be looking at, things they should be avoiding. And think of it like the Cliff Notes version of what we'll be talking about for the next half hour. Good to go?
Yeah.
Go.
All right, guys. The first thing that I'm seeing in the mastermind that I host and the other investors that I'm talking to is that they're caught in projects that aren't cash flowing or flips that aren't going to pan out. And I won't lie, I was in the exact same situation 6 months ago, and I got some really great advice, and I'll give you the exact same advice. And the advice was to sell the red fast. And so what we were doing prior to this was we were, pricing it, for example, at $500,000. We would always price it at $515,000 on a traditional sale. Well, we were chasing the market down. And so my advice to you would be to get ahead of the market if it is in a declining state and just try to sell them fast. And at the end of the day, you will end up with more money in your pocket otherwise.
All right. So you're a runner. I used to run marathons 50 pounds ago. But in the Marine Corps, we learned a lot of first aid. And what you're really talking about there is triage, right? It's like stop the bleeding. These are the steps of first aid. Stop the bleeding, protect the wound, and then you treat the person for shock. And I think there's a lot of developers specifically, or even flippers of large assets that they started bleeding and they didn't stop the bleeding. And only once you stop the bleeding can you then protect the wound, right? Make sure it hadn't spread anywhere. And then, it's shocking. When you go from everything was making 20% more than you expected to nothing is making more than you expected, it's tough, isn't it?
Yeah, man, it's terrifying. And it was happening for a while, right? I mean, we have this Canadian portfolio, it was, and in Florida too. I mean, everything, we bought at the wrong time in Florida. I got just too horny and just got too aggressive and didn't really dive into the market and look at the market trends and see where we were. I was just like, I'm buying these properties because I need to be here. But, looking back on it, the market was right at the peak in Florida and it started to trickle down, and we were still 6 months into finishing these things.
Yeah.
And so where we thought they would be at high 8s, they ended up, we just closed the last one yesterday, actually at 640. And we still walked out with our equity The investment, we didn't make any money, but what happened with the interest rates in Canada, they went from sub 2 to, like 7, 6.5, 7, and the portfolio was bleeding. And to your point, like, I was just watching, I'm like, oh, it's, the things that I thought I had to do were just not the things I needed to do. And I was just like trying to like make an extra 20 grand here and make an extra 30 grand here instead of just solving the problem.
Right.
Right. And, sometimes I think we just can't see the forest for the trees, and you need some good people around you to say, hey, listen, dickhead, this is how you solve the problem. Like, this is what you need to do. This is the advice. And I got that, thankfully. And, with that and quick action, like literally 15 minutes a day, I could focus on selling these properties really aggressively. And then you can get back to like, okay, well, now you've stopped the bleeding. How do we go on from here? Right? What's the next step? Right.
And, I'm old enough in this business that I had to go through that. And it started in '07. And really '07 was the bleeding point. And then in early '08, we realized like we were going to bleed out if we didn't, stop. And so we stopped all the bleeding. And then, it took a year or two to really, you not only just, it's not even about the money, it's the confidence, right? It's the being so sure about your execution, the surety of the execution, where like you're willing to pull the trigger. So single family, then developments, and then you get down here into Florida, and you do some self-storage as well, right? You said you were developing 2 in Texas?
2 in Houston.
So, okay, so Houston's not Canada or Florida. How did that happen?
Yeah, so when I come down, if I'm going to do anything that I've never done, I always hire a coach, right? So I hired a coach that's all they do is self-storage. And so we found the site, we put it under contract, and I worked with him, and he's on our GP. Him as well as a couple other guys. One other guy that's has developed a couple hundred facilities over the last 30 years, right? So for me, what I need to do is put together a really strong team, because there's no hope in hell that first off, I wouldn't risk myself, my own, reputation on it, but also, risk other investors' money. So that was the big thing is just putting together a really strong team. And then from there, working with the team to go through the first steps in a syndication. And, I always understood underwriting. Obviously there's some nuances as associated to storage and some trends with storage. And, just every asset class is a little different, multifamily the same. But I understand the basics, and I always underwrote my own deals before. So I was always very involved in that, even including in the storage part. So it didn't take very long to understand, what makes a good deal, what makes, what moves the needle up and down on a good storage deal. And, so it wasn't overly complicated. I mean, we've done enough deals over the time. And again, when you surround yourself with the right team, ultimately, I think, transitioning to bigger deals is easier and safer.
Right.
Yeah.
So here we are. It's been a year and a half. We were on the elevator earlier. We're talking about car washes. Like a lot of people out there are just trying to get by, right? And then a lot of investors may be stuck in the wholesaling rut when there's other things out there. Could you talk about maybe why you've transitioned to these other things, how you've done it, and what your advice would be for someone that may be out there thinking, yeah, I would love to stop doing single family and do car washes?
Right. Yeah. Well, I mean, we also mentioned while we were before the elevator, you're like, hey, if we could do, $50 million in 5 deals versus 500 deals, why wouldn't you? And the theory is the exact same. Like if you want to make $1 million a year, you could go and flip 100 houses, or you could go and do 1 car wash deal or 1 storage deal. Right. It depends. And I realized that, over the years, we started with duplexes, converting single family home to duplexes, and then single family homes to triplexes, and then buying 1 house and putting 10 units on that lot. And so that growth, the amount of money that you earn is proportionate to the size of the deal. And the effort is not the same. The effort to make $1 million in 1 bigger deal is not equal to doing 100 flips. It's just not. It's fucking easier to do a bigger deal.
Right.
Obviously there's more zeros. There's a different risk associated. There's different, you're talking to if you're raising capital, you're talking to a different investor. You're putting a different team together. But yeah, so I think that is ultimately the economies of scale make sense. But it's more about, you got to rely on the who, not the how, right? It's back to like, I'm not doing this myself. Who's already done what I want to do, and how can I bring them in as a partner?
What oh my God, I lost my question. Hang on. This never happens to me. Hang on. Oh,
First time.
what are the risks? You said the risks are different. Could you maybe talk a little bit about what the different risks are, the higher up that food chain you get?
Yeah, I would say the development, like in development play, there's development risk associated to it, right? So time is one of the big things. And then also just the planning risk. So whether you're actually permitted to do what you think you want to do on that site is a fairly significant risk. And so, the risk in Texas is different than that in Ontario or in California, for example. Like the development risk in these areas are, in my opinion, significantly higher because of the time, right? Like you can burn through a lot of money sitting on land, not being able to build what you want to build, right? So that is one of the things I think is time is probably the biggest risk. And then, for right now, I think one of the more challenging things is getting financing, getting debt, right? I mean, I don't think it's just in storage and in developments, but also in larger, I know some guys that were mentioning the names earlier, that they're struggling getting financing as well. So yeah, I mean, these are some of the risks associated to it. And the risk isn't, if you're doing single family homes or flips, a lot of times you're going to get to the point where you're using your own money.
Right.
But once you go to an investor and you're borrowing, investors' capital, the risk is totally different, right? Like you have to be accountable for that money. You need to return that money. Like people are relying on you to mitigate their risk.
Right.
And your reputation's on the line, and obviously people's livelihoods too. So.
Yeah, and it's huge. I mean, the payoffs are great, but let's talk about, you keep talking about building the right team, and I understand maybe having a mentor or a coach that does what you want to do. But what's your deal team look like? I mean, do you have a bunch of full-time employees? What's that structure look like these days?
Yeah, so on our Canadian side, we had all like an internal property management company, construction company. But when we came to the U.S., we started with an acquisition specialist, and that person was our first hire. And they work directly with me, and then they have a few virtual assistants that work with them, and that source the land and scrub the land and different lists and off-market strategies. And then we also have a chief development officer that looks after the projects and sites when they are during construction. So that it's a pretty small team. And then we've got a CFO that works with us on the underwriting and bank financing. So essentially right now there's 7 of us in between, so there's 4 that are in the U.S. and some VAs.
Very nice.
Yeah.
So we're going to take a quick break, come back, and then I want to talk about kind of interest rates and the fun stuff.
All right.
Stick around. We'll be right back. At RCN Capital, we know that time is money. With our competitive rates and quick turnaround time, you can receive funding in as little as 10 days. We offer flexible payment plans to relieve the pressure of repayment process. Our team is experienced in making sure that you choose a loan that will suit you best. Get on the phone with the loan officer today by emailing info@rcncapital.com or clicking the link in our bio. Welcome back to Uncontested Investing. Tim Harridge here. I'm with Brady McDonald. Brady, time is your friend when you own income-producing real estate, but is your enemy when you own vacant real estate, much less land.
Yeah.
Especially if you have debt. Well, maybe not if you don't have debt and whatever. But interest rates moving in an environment like storage or commercial, when cap rates are the valuation factor, can you maybe walk everyone through maybe what you've seen in the last 18 months on either both on cap rate or even the types of financing that is or isn't available?
Yeah, so when I would say like 18 months ago, you could get on construction 80% loan to cost. You're probably at like what, 4.5% interest. Now, now the loan to values are like 65, 70 is pushing it, right? 70, possibly 75. But the banks that were promising 75 are also like, because we're shopping debt right now, they're also throwing it at a 60% loan to cost, sorry. Right? So, and it's changing like daily. Like, I mean, every time the announcements come, they're like, oh yeah, we're out. It's a challenge. The interest rates are anywhere from like 7.5 to 8.7% is what we've been seeing on these projects. Yeah.
So that's interesting. I wonder, and this is just me thinking out loud, how much of this has to do with the projections that the consumer is not going to have the money to spend? I mean, because storage has been on fire.
Yeah.
But do people really need that much stuff and need to store that much stuff if they're not getting a flow of money?
Yeah, I mean, the thing about storage is that it is sticky. So all that shit that is in storage, like, let's face it, most people don't use any of the shit that's in there, but then they also don't want to throw it out, right? I mean, I've got storage units. Now I can afford it. But so it's sticky. I mean, and it doesn't really cost that much. I mean, in the top markets, a 10 by 10, our goal would be to see it over $200 a foot over the entire year. So let's call it $170 a month, right? So, most are probably anywhere from $100 to $200 a month. So can they afford that? Are they going to throw their crap out versus make the payment?
Right.
I guess when you look at history, though, in 2008, it didn't, like, people continued to pay for their storage. If you're going to downsize a house, the history shows that they can make sure that they're going to pay the $150 versus throw all their shit out and have to buy it all over again in 2 years when they've recovered. Right?
Huh. Well, yeah. I mean, I just, so you wonder. I guess you reduce the loan to cost to make the sponsor have more money in the deal, just in case rates continue to rise and their exit cap rate is much lower than anticipated.
Essentially, there's that. And the other thing that they're really doing is lowering the service debt ratios, or increasing them.
Oh, yeah?
To 1.4, yeah. So that destroys the loan amount. And that's what we've seen as well. So 1.4 versus 1.3 is a lot, Well,
yeah, because if I jack up your loan to cost and your cash flow requirements,
yeah.
I mean, look, as a lender, that's really what you're doing. You're saying, okay, where's my risk, and what levers can I pull to mitigate my risk?
100%.
Yeah. So the lender's like, yeah, I'll still do it, but
yeah.
I need 50% down.
Right.
Really and truly.
Yeah.
It's and if you're trying to be competitive in a marketing packet by saying, well, we'll go up to 70 LTC, well, then you just raise your debt service coverage ratio.
That's right.
In effect, you're lowering the LTV.
Exactly.
The LTC, that is.
Yeah.
So you mentioned your mastermind. What's your mastermind?
So when we came to the U.S., we started a mastermind called Florida Mastermind, and it was really to help Canadians get down in the U.S. and start, growing down here. Because honestly, like it is 100 times. You guys have it great down here. It's amazing. It is a land of opportunity. And so that's what it was. But then it turned into something that we called the Grit Mastermind, where it's kind of like Boardroom, where it's a 12-month and a bunch of active investors in there, and we meet 4 times a year. Yeah, it's more than just real estate. So we talk a lot about, fitness and looking after your body, because I've seen through my journey over the last year and a half, since I've started getting into Ironmans and running long distances, that by looking after your body and doing hard things on purpose, then that really helps the mindset. The relationships get easier. And ultimately at the very end, making money is a lot easier. So we talk about all 4 of those things and get vulnerable. And I think, that's one of the things I learned in the boardroom. Like we can't help the people that come to the mastermind if they don't tell us their real problems, if they aren't vulnerable, if they don't, let their guard down.
Right.
And it's taken, like, over the last year, the last one we just had, I similar to the stories I just told you guys, like, that we were bleeding and that this is what we had to do. And this is how shitty it can be, but this happens.
Yeah.
Right. And we can't help. And I got vulnerable with them, and they just let it all out. And we solved some real problems. Right. And I think that was the big takeaway for everybody. Like, there's so many of us that, we hide behind the Instagram perfect life, and everything's great in my marriage and everything's great in my business. In reality, it's like, if you're doing that around your peers, where the people that can actually help you,
right?
Then
you don't want help.
You don't want help, and I mean, you're really missing out on the opportunity, right? So that's what that's about. And we'll do like 5K runs, and we're doing a cruise destination in December, and I'm going to do a half marathon for whoever wants to do it around the cruise, just an experiential deal versus just getting there and talking about.
So if I join your mastermind, I have to run a half marathon on a cruise?
Nah, you can walk it, Tim.
Yeah.
So not very good at sales here.
That's 13.1 miles, in case you don't know, because I ran 2 marathons.
Yeah.
And boy, when someone says 26 miles, I'm like 0.2. You can't forget that 0.2.
Oh, marathons are brutal, dude. I've only ran one.
What got you into that?
You know what it was?
Wait.
Yeah.
Time out. You only ran 1 marathon.
Yeah.
But before the show, you were saying that you tried a 50-mile run?
I did that. Yeah. So how did I get into it? I did the 75 hard back in 3 years ago.
Yeah.
And the reason I did that was because one of my mentors, they're actually from Texas. All my successful friends are from Texas.
There's a reason for that.
There's a reason why I'm going to be around here more too.
Right.
No, and I saw him, he was doing the 75 hard, which is you got to work out twice a day. It's a mental toughness challenge. You got to work out twice a day, drink a gallon of water. You got to, do all this shit. And one of the hardest thing is no booze. And I told my wife this, and I was just like, I drank booze since I was 15 years old. Like, it was a hobby and a sport where we grew up, right? And I told her this, and she just laughed her ass off. She's like, there's no way in hell you could do it. So that was the reason why it made it the challenge for me. I did it. I crushed it. I did 75 days, no booze, worked out, looked like I went from looking like, if you knew who Rob Ford was, a big, fat, puffy dude, to, more what I'm looking like now. And I got clarity. My business took off. We did bigger deals. I had more courage. We took the family to Costa Rica for 5 months during COVID. We came back. They locked us down. And then that's when I said, well, we're not living here anymore. We're going to go to Florida in December 2021. November comes. I said, I need to stop drinking again. I need something physically to change my mindset. And that's where one of my friends invited me to do a half Ironman with them. And so I'd never ran I've ran a half marathon before once, and I've never swam like that, never biked like that, but put the training in, hired the coach, and 4 months later I completed a half Ironman. And again, that was when I was forcing my body into doing these hard things, the mindset got right. And when my mindset got right, I became a better dad, a better husband, better at business. I could communicate better. Everything just got better. And then when the thing that got me into running though was I saw Jesse Itzler. You know what Jesse is?
No.
Yeah. So Jesse last year did Ultraman, and Ultraman is 3 Ironmans total. So it's some crazy long distance, 6.2 mile swim. I'm going to all this up, but 170 mile bike, or maybe 270 mile bike, and 3 marathons. And he did it. And I just look at Jesse and I'm like, this is just an everyday dude. If he could do it, I can do it. Right. So it's all up here. That just proved to me that it's up here. And so I ran a marathon in January. That was my first one. And then, oh, by the way, I hired Jesse's coach, right? Because I'm like, if whoever got Jesse to do that shit, I want him to be because I'm no superhuman, right? And so I hired his coach. I did a full marathon, and then May 20th, I ran 50 miles in Key West, in the Keys. It was 109 degrees Fahrenheit. Crossed the finish line, first place. But I didn't realize it was in first place. I ended up in the hospital for 3 days with rhabdomyolysis, and my family thought I was dying. And it was a humbling experience because you don't know how bad it is, right? And they're the bill was $46,000. Just got it. And they found that I had a hole in my heart, and they're telling you can't do anything. You can maybe golf. And I'm thinking, this is the stuff that's making me good. This is what's making me a better, back to being a better dad, being a better communicator, reaching out, just being a better business person, being more accountable, right? And I'm they're taking it away from me, and could I die? And all these questions. And ultimately, I walked out of there, and 3 weeks later, I was supposed to hike a mountain, the height of Mount Everest, 29 vertical feet. And I'm because I found my purpose, I realized that this is not only helping me, but it's also inspiring other people. And I felt like it was the first time I ever felt like I was being ripped to something, right? Anyway, long story short, I got all cleared, and I did the mountain simulation, and then I'm like, okay, well, I'm going to run 100 miles, and I'm going to raise $100,000 for charity. So that's what I'm doing next.
Very nice.
October 17th.
We're coming back to that right after a break.
All right.
Stick around. We'll be right back.
REI Inc. is a monthly business publication for real estate investors, covering all types of real estate investments and strategies. It is the most comprehensive real estate investment publication on the market. All of the articles are written by the top leaders in the industry, so investors are assured of always getting the best information possible. Each month, REI Inc. also profiles the top companies in the industry and provides insights and data into key regional markets. Along with their sister platforms, the REI Referral Network and Highest Invest, real estate investors have exclusive access to off-market investment opportunities and national acquisition and disposition initiatives. To learn more, visit www.rei-inc.com, where you can also access the REI Referral Network. Also, be sure and visit www.highest-and-best.com to view the latest exclusive off-market assets with near immediate acceptance decisions and closing strategies. You can also email marketing@rei-referralnetwork.com to request more information.
Welcome back to Uncontested Investing. I'm Tim Harrod. Thank you for sticking around. Brady, I really want to get into mindset and everything, but first, the next segment is called the Money Minute. So it's up to 60 seconds. I want you to imagine there's an entrepreneur or an investor out there that may be struggling or maybe super successful and isn't fulfilled. I mean, they don't have to be a struggler. And this is the only 60 seconds of advice they're going to get all month. Like, after they listen to this 60 seconds, like, they're shut off from the world and they've got to execute on your advice. So it's got to be the best stuff you have, all right?
All right.
You ready?
Yeah.
Go.
Let's go. So first thing I always go back to is your vision. If you don't have a clear vision, it's like going on a road trip without a destination. You should never do that with your life. As hokey pokey as this is, create a vision board with you and your family. This is your reason why you're going to do anything. The next thing is focus on one strategy. If it's in real estate, all right, focusing on one strategy and honing in on it. What I would highly recommend is figuring out one strategy in one market that is scalable, and dive deep in it. If you really want to turn this into something that is going to make you a lot of money, then the magic is in the deal. Okay, so that's the biggest piece of advice, is finding the best deals and pairing the deal with the buyer. So whether that's the exit strategy, right, and you do all the work and find the exit strategy, or you just wholesale that deal. There's a million different ways of getting out of the deal, but it has to be a great deal. The biggest thing that I would always go back to, though, step number one is create the vision.
I didn't catch this earlier. Earlier when you talked about the benefits of like 75 hard or the working out, the first thing you said is better father. Twice you said it. That was the number one on your list. And then you just said a vision board with your family in it. And I really felt like you were trying to emphasize that. What's up with that? Why are we emphasizing that?
Yeah, because I've been on this personal journey. Like we've made lots of money over the last 6 years, right? And it was just like transactional. It was just about to make the money. But everything has changed for me over the last year and a half since I've really figured out the fitness thing, the mindset thing, and now I'm doing things for the right reasons. And for me, like, my why is for my kids, and not to show them, like, not to give them all the shit. I shouldn't have sworn again.
You're fine.
It's not to give them all the stuff. It's to show them, to truly demonstrate to them what hard work looks like. What are ways to make money? What does great relationships, business relationships, personal relationships look like? What does, doing what you say look like? What does going above and beyond look like? What does showing up? What does living a full life? What does traveling look like? What does freedom truly look like? And I don't tell my kids anything, because if I tell my daughters to do something, or that you should do these Ironman or these triathlons or be this swimming or do this, do that. They don't listen to shit, but they do everything I do. Right. And that is just purely natural. Right. And so I realized that over the last year and a half. And so that's my why, man. And I want to incorporate what my kids want in their life. Right. So we've kind of followed some of the stuff from the Family Boardroom, which is a book where we every quarter we have a meeting with our oldest. Our youngest isn't quite old enough yet, and talk to her and say, hey, what is going to make your next 3 months amazing? And it's the little things. Like, we thought that driving Kylie to dance and taking her to this place and taking her to that place was really what good parents look like. But then she said something to us the other day. This was not the other day, sorry, like 3 months ago, the very first time we did this. And she said, like, what does Kylie want? Right. And she's just said, I just want you guys to play with me. And it's just like, we're doing all this other shit, all this other stuff for our kids. And our kids just want to spend time with us. Right. And it's just like, damn, it just hit the heart. And it realized, so those are the two things. I mean, it's really trying to live an intentional life with our children and be the leader.
Saturday morning, I woke up and we didn't have anything planned. It's hot as all get out in Dallas, and so there's not a lot to do. And we hunt on this 6,000 acre ranch, and there's a couple ponds, and you can fish. And I'm sitting there in the kitchen with my son, my 13-year-old. And if you go back and listen to the episodes we've already done, right, like Greg Hurleen earlier, which would be week 2 of this, so it went 2 weeks ago, he talks about, like, you really only have your kids till they're 13 or 14. After that, like, they kind of become their own humans, right?
Yeah.
And I looked at my son. I said, what do you want to do today? Because I know I'm about to lose him, right? Like, I already went through that with my older son. They disappear, then they come back at 22 and tell you were right about everything, and then they want more money. I said, you want to go fishing? And his eyes just lit up. And we just hopped in the truck, drove 3 hours, went fishing, had a little campfire, hung out together, got up, rode 4-wheelers, fished again, and drove home.
Yeah.
I mean, just the look on his face. It's that I spent time with him.
Yeah.
That was it.
Yeah. That's all they want, man.
Can't buy him something. Can't take, because I'm same way. I'm intentional. I'll take him to school every day. Like this morning, literally, my driver picked me up at the house, took me and my kid to the middle school, dropped him off because he has practice at 6:30 in the morning. And I literally scheduled my flight here around that because I knew it's first week of school, first week of football. Yeah. And, I got Kent Clothier waiting on me. I'm a little late. But, yeah, man, it's important to do all of those things. But I super love that part. Like, ask them what they want because it may be completely different than what you think.
Yeah. 100%.
So I have a question, and then we're going to wrap up. So Kent Clothier, in week 1 of this boardroom series, which this is what I love, right? He said that he wasn't really big about narrowing his business down to just one thing. He's got a bunch going on. And then Greg Hurleen the next week's like, no, you got to give everything up and just do one thing really well. And then Justin Colby last week just said, no, be a multitasker, do a bunch of things. And then now you just said you may need to do only one thing. I'm not asking you to disagree with Colby and Clothier or to agree with Hurleen. Maybe now, because you know those people.
Oh, yeah.
Why do you think it's a personality thing that makes certain people need to do one instead of the other? Or do you disagree with them? What are your thoughts on what I just shared with you?
Well, I can tell you my experience is that I'm an ideas guy, and like I'll go down all the rabbit holes at the same time. And from my experience, that I'll do all of them. They'll all make money, but if I focus more on like 2 or 3 things, I'll do 1,000% better than doing all the things. So I think you can go a little bit wide, but I think you need to focus on more deep. I've had to cut things out of my life and my business over the last 2 years to make sure I'm focusing on the right things, like the bleeding, right? Like, got all this stuff going on, and you just don't even pay attention to some of the things that are killing you, right? And so you're
making $100,000 a month over here, but you're giving 30% of it away over here, and you don't even realize.
Right. Right. So, I'm kind of like figuring out that, like, so I've got, like, right now I'm really focused on two things. And so I think you can do a couple things, but I think you got to be careful and not spread yourself too thin.
I tend to agree. I'm working personally on narrowing things out of, it's not even, it's, for me, it's peace of mind.
Mm-hmm.
Like, I enjoy sitting in the living room with my wife when the day is over, and we spend about an hour just talking. Like, what happened today, what's going on. A lot of times we end up talking about our Airbnbs and all this other crap, but I don't like sitting there I don't like the part of the conversation, I didn't do that yet. Like, I need to get up and go back into the office.
Yeah.
And, like, I think, for me, I think balance is BS, but also I think balance is very important.
Yeah.
You just have to understand nothing's ever going to perfectly balance, but those scales can get really tipped the wrong way if you're not careful.
Oh man, I've been on the, doing everything, and that's not going to work. Doing one thing isn't going to work for me either, probably just because my attention, I can't focus on just one thing, right? But I think there is, for most people, I don't really know. For me, it's like two, 3 things max,
and they're connected.
Yeah, they're totally connecting. One is serving the other. Right, it may be a lead gen source, it may be a mastermind, and like a community that you're building that is leading to maybe investors and development partners and something else like that. Like, so they are sort of connected. That's where I kind of see myself going forward.
So if someone's out there listening, they have questions, they want to connect with you, how do they do so?
I'd say Instagram is probably the best, at Brady.McDonald84. Right now, we're on a big mission to hit 100,000 followers. Nowhere near that, but I'm donating $1 per follower to Operation Underground Railroad. So that would probably be the best place to...
Is there a video of that on there?
If you go to 0to100.com, there's a video about it all, as well as Instagram.
All right, so 0to100.com. I'm going to make sure that we try to get you more followers and cost you money.
Yeah, perfect. Appreciate it.
Well, thank you for being here. I really appreciate it.
Yeah, thanks a lot, Tim.
And we're out of time. Thank you for listening in. Remember, your network is your net worth, and today you've been growing both. We'll see you next week.
Thank you for listening to Uncontested Investing. Questions about today's episode or the podcast? Email podcast@rcncapital.com and make sure to follow REI Inc. magazine on LinkedIn and Facebook, and RCN Capital on Instagram, LinkedIn, and Facebook. See you all next time.